Hi friends, in today's video, we're diving into something that can completely transform the way you trade, the 90-day trading psychology strategy. This is a step-by-step approach designed to strengthen your mindset, sharpen your discipline, and build the emotional control you need to survive and thrive in the markets. We'll talk about how to manage your emotions so fear and greed stop sabotaging your trades, how to build rock-solid confidence in your strategy, and how to develop the discipline and consistency that separates successful traders from the rest. So, if you're serious about leveling up your trading game, make sure you watch till the end. And don't forget to like, share, and subscribe for more powerful trading insights. Let's be honest, trading is not just about charts, candlesticks, or technical indicators. It's also about you, your mind, your feelings, and how you react under pressure. The market is unpredictable, and every single day it will test your patience, your discipline, and your emotional stability. Steven Hart explains that two emotions in particular, fear and greed, are like silent assassins of trading accounts. Fear can make you freeze, exit a trade too early, or avoid good opportunities because you're scared of losing. Greed, on the other hand, whispers in your ear, just a little more, hold on longer, take another trade. And before you know it, both fear and greed have hijacked your decisions, pulling you away from your carefully planned strategy. Now, here's the real danger. When these emotions take over, you're no longer trading based on logic or skill. You're gambling. And that's the fastest way to blow up your account. The 90-day challenge focuses on training your mind to stay calm, even when the market is going wild. How? The first step is learning to recognize your emotional triggers. That's where journaling comes in. I know, writing things down might sound boring compared to the thrill of clicking buy or sell. But here's the truth. Your trading journal is one of the most powerful tools you'll ever have. After every trade, jot down not only your entry, exit, and reason for the trade, but also how you were feeling at the time. Were you anxious? Overconfident? Did you enter because you saw a solid setup or because you didn't want to miss out? Over time, this habit will reveal patterns in your behavior. You'll start to notice, oh, every time I feel impatient, I jump into bad trades. Or when I'm in profit early, I tend to close too soon because I'm scared it will reverse. These insights are priceless because you can't fix what you don't see. Steven also stresses the importance of having a clear trading plan and actually sticking to it. Think of your trading plan as your safety net. It's there to catch you when your emotions try to push you into impulsive decisions. Without a plan, every market move feels personal. With a plan, every market move becomes just data, something you respond to with logic, not panic. But even with a plan and a journal, you still need something else, mental conditioning. That's where mindfulness comes in. This doesn't mean you have to meditate for hours on a mountaintop. Mindfulness in trading simply means being aware of your thoughts and feelings in the moment, without letting them control you. It's about catching yourself in that split second before you act, asking, am I following my plan, or am I just reacting to fear or greed? This is especially important when the market moves fast. Picture this. You're in a trade, the price suddenly spikes, and your heart starts pounding. Your instinct screams, close it now, but your strategy says, wait for confirmation. That's when mindfulness saves you. It gives you just enough space to breathe, think, and make the right call, not the emotional one. The beauty of this 90-day challenge is that it's not about becoming a robot. You're not trying to erase emotions. That's impossible. You're learning to manage them so they don't manage you. Just like a professional athlete still feels pressure before a big game, a professional trader still feels the rush of adrenaline during volatile markets. The difference is, they know how to use that energy without letting it push them into mistakes. And here's something most beginners overlook. Managing emotions doesn't just protect your profits, it protects your confidence. Every time you act calmly and follow your plan, you build trust in yourself. That trust becomes the foundation for consistent trading. Think of your trading journey like building a house. Your strategy is the blueprint. Your risk management is the solid foundation. But emotional control? That's the frame that holds everything up. Without it, the whole thing can collapse in a single bad day. So, over these next 90 days, make this your mission. Recognize when fear or greed is influencing your decisions. Record your emotional state in your journal after every trade. Refocus on your trading plan whenever you feel the urge to act impulsively. Reset your mind with quick mindfulness techniques when emotions spike. If you can commit to this, you'll not only survive the markets, you'll start trading with clarity, confidence, and control. Remember, in trading, your biggest opponent is not the market, it's your own emotional impulses. Master them, and you're already ahead of most traders out there. Stay calm, stay focused, and let's keep building your trading mindset one day at a time. Building confidence, trusting yourself and your strategy. Confidence in trading is not about arrogance or overestimating your skills. It's about having a deep, unshakable trust in your process, your strategy, and yourself. Without that trust, every trade feels like a coin flip, and every small loss feels like proof that you're not cut out for this. Steven Hart explains that true confidence doesn't come from winning every single trade, because no trader in the world does that. It comes from knowing your strategy works over time, even if individual trades don't go your way. And to build that kind of belief, you need proof. That's where backtesting comes in. Backtesting is like interviewing your strategy for a job before you hire it. You take your trading rules and test them on past market data. You see how they would have performed in different conditions. Trending markets, choppy markets, high volatility, low volatility. When you do this properly, you don't just get numbers, you get confidence. You see with your own eyes that your strategy can survive bad days, recover from losses, and still deliver results over the long run. Once you have that evidence, something changes inside you. In a live trade, you're no longer thinking, I hope this works. Instead, you're thinking, I've tested this. I know my edge. I just have to execute. That shift in mindset is huge. It's what keeps you calm when others panic. Now, the 90-day challenge doesn't stop at backtesting. Hart emphasizes daily trade reviews. This means after the market closes, you sit down and go over every trade you took, whether it was a win, a loss, or break even. You ask yourself, did I follow my rules? Did I let emotions influence my entry or exit? What could I have done better? By doing this every single day, you reinforce your trust in your system. You start to see patterns. Maybe your best trades happen in the morning session, or maybe your worst ones happen when you break your own rules. This awareness builds a stronger belief in the process because you're proving to yourself day after day that discipline works. Journaling plays a big role here, just like we discussed in the emotions section. But this time, the journal isn't just for spotting emotional triggers. It's also a confidence log. You're recording your wins and losses, yes, but more importantly, you're recording why trades worked or didn't work. This builds a library of lessons that's yours alone, something you can go back to anytime doubt creeps in. Here's where many traders go wrong. They measure their worth only by profit and loss. If they have a green day, they feel amazing. If they have a red day, their confidence crashes. Hart warns against this trap. Instead, focus on the process, the things you can actually control. Did you follow your setup? Did you stick to your risk management rules? Did you avoid revenge trading? When your confidence is built on process instead of outcome, losses don't shake you as much. You understand that even a good trade taken for the right reasons can lose money. And that's okay, because over time, following the process is what makes you profitable. One of the most powerful side effects of confidence is that it kills two of a trader's worst enemies: FOMO and self-doubt. When you believe in your edge, you're not chasing every random move because you know your setup will come again. And when you take a loss, you're not questioning your entire career choice. You're simply logging it as part of the journey. Confidence also changes how you show up every day. Instead of sitting down at your desk feeling anxious or desperate, you feel ready. You're not in the market to see what happens. You're here to execute a plan you trust. That shift turns trading from a stressful gamble into a professional operation. Over the next 90 days, here's what I want you to commit to. 1. Backtest your strategy on at least 6 to 12 months of historical data. Don't guess. Prove it works. 2. Review every trade daily, not just the numbers, but the decisions behind them. 3. Journal your process, recording both the good and the bad so you can track your growth over time. 4. Measure success by discipline, not just profits. If you stick to this, something incredible will happen. You'll stop looking for magic indicators, hot tips, or perfect setups. You'll realize that your edge was there all along. It just needed your belief. Remember, in trading, confidence isn't about knowing the market will go your way. It's about knowing that no matter what the market does, you will stick to your plan. That is the kind of confidence that builds profitable traders. Stay consistent, stay disciplined, and trust yourself. Because if you don't, the market never will. Discipline and consistency, the backbone of trading success. If confidence is the fuel that keeps you moving, then discipline is the engine that makes sure you're moving in the right direction. And without consistency, that engine stalls, sputters, and eventually stops. Steven Hart calls discipline the core of his 90-day challenge, because without it, everything else falls apart. You can have the best strategy in the world, the sharpest market analysis, and the most advanced tools. But if you don't have the discipline to follow your plan, it's all useless. So what does discipline look like in trading? It's not about being rigid for the sake of being rigid. It's about creating and sticking to a structured routine that keeps you from making emotional, impulsive decisions. Hart explains that discipline starts with the basics, setting specific trading hours so you're not glued to the screen all day, chasing random moves. Following your risk management rules every single time, no exceptions, no just this once. Avoiding overtrading, even when the temptation is strong. It's these small but consistent actions that separate the amateurs from the professionals. Now, let's talk about consistency. Many traders think it means making profits every single day. That's not what it's about. Consistency means showing up the same way, with the same focus and process every single time you trade. It's about building habits that make good decisions automatic. Think of a professional athlete. They don't train hard only on the days they feel like it. They show up, rain or shine, and put in the work. As traders, we need that same mindset because the market rewards discipline over time, not random bursts of effort. One of the simplest yet most effective ways to maintain discipline and consistency is daily journaling. This isn't just about recording your trades. It's about holding yourself accountable. Did you follow your plan today? Did you stick to your risk rules? Did you avoid overtrading? Writing these answers down forces you to face the truth. Hart points out that journaling also helps you spot patterns in your behavior. Maybe you notice that you break rules when you're tired, or that you overtrade after a big win. These patterns are like flashing warning lights. They tell you exactly where you need to tighten your discipline. Here's the thing. Discipline doesn't mean you never slip up. You will. Every trader does. But when you have a consistent routine, those slip-ups become rare, and you recover from them faster. Without a routine, one bad decision can spiral into a whole week of mistakes. The real magic of discipline and consistency is what it does to your mental state. When you stick to your process, you start to feel stable, even in chaotic markets. The ups and downs don't shake you as much because you know your job isn't to win every single trade. It's to execute your plan without deviation. This mental toughness is what keeps you from chasing quick wins or jumping into random setups just because you're bored or desperate. Instead, you learn to wait patiently for your edge to appear. And when it does, you take the trade with full confidence, not because you hope it will work, but because you know it meets your rules. Hart is very clear on this point. Discipline was the key to his own journey to profitability. Early in his career, he made the same mistakes most traders do. Breaking rules, overtrading, and letting emotions take over. But once he committed to a strict routine, something shifted. Trading became less stressful, more predictable, and far more profitable. Over the next 90 days, here's what I want you to focus on. 1. Create a structured trading routine. Set trading hours, prep time, review time, and downtime. 2. Stick to your risk management rules. Never increase position size out of frustration or greed. 3. Journal every single day. Even if you don't take a trade, record what you learned or observed. 4. Review your consistency weekly. Track how often you followed your plan, and aim to improve. Remember this. The market doesn't pay you for making big trades. It pays you for making the right trades consistently over time. And the only way to do that is with discipline. Discipline protects you from impulsive actions. Consistency turns good habits into second nature. Together, they create a trader who can weather storms, survive drawdowns, and keep growing year after year. So, commit to the process, show up every day with purpose, and let discipline and consistency be the pillars that hold up your trading success. So friends, that's the essence of the 90-day trading psychology strategy. A simple but powerful plan to help you control your emotions, build lasting confidence, and stay disciplined no matter what the market throws at you. Remember, it's not just about making profits today. It's about building the mindset that keeps you profitable for years to come. Start applying these steps, stay consistent, and you'll see the change not just in your trading, but in the way you approach every decision. If you found value in today's video, make sure to hit the like button, share it with your fellow traders, and subscribe to the channel for more strategies that can take your trading to the next level. Thanks for watching, and I'll see you in the next video.